It's going out there. It's February 7th. And I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I beat the headlines and... tell you what's really moving these markets. Man, word of advice. Don't ever build your own home. Whoever says, it's the best thing in the world, you got to do it, they're lying. Because holy cow, the amount of time, aggravation, BS, everyone trying to rip you off. HOA, permits, your relationship with your spouse, it better be really, really strong to survive this because it's stressful. It's really stressful. And during the fact my wife's in a car 4 hours a day driving my daughters to school, which she lets me know about for probably 2.5 of those 4 hours every single day. Then, of course, the work schedule, which everybody has. I work a lot. Then I get home, which is usually late. I'm helping my kids with their homework. And I don't know how it is with homework with you, but or with your kids, when I grew up, and again, I was a bad student. I didn't really do too much homework. But it's insane. I mean, it is insane. It's my 12-year-old, right? This is just a homework from last night. So she needs to study for her history test. It's going to be India, ancient times, which is 7 chapters and 60 pages. Includes 30 definitions and essays. She has 20 problems in math to do, and the 20 problems are not easy. Like hard word problems, conversion charts, tables, stuff that I have to go back and look at. English and grammar, which makes her label every word in every sentence. She's like, could you help me with this? Every word. So not just talking nouns, verbs, adjectives, adverbs, that's easy, but subject nouns, subordinate conjunctions, objects of the prepositions. I mean, I'm considered a professional writer. I don't know how to find half of that shit anymore. Are you kidding me? Just labeling everything over the top. And that's not it. There's vocabulary for English, like 20 words every week that they test her on. And it's not like this multiple choice and I could teach her, hey, know how to eliminate some of these answers and this way it could increase your odds to get it right. No. They make her write sentences with these words to make sure that she actually knows what they mean. Then she has 3 book reports due this week of books that she read pretty much over the past 3 to 4 weeks. And then 2 tests and 2 quizzes this week. And that's more work than I did my sophomore year at college, and she's in the 6th grade. My wife and I would talk about it. We were pissed off because we're up helping her. We have no time, but, all right, we need to see the teacher. And we saw the teacher last week, and I asked her, we sat down. I was like, is it normal for a 12-year-old to go to school for 7 hours a day, right, 35 hours a week, and then have at least 3 hours of homework every day? I mean, you're looking at 50 hours a week. And there's kids in China making Nike sneakers that wouldn't trade places with my daughter right now. They'd be like, no way, man, that's slave labor. I wouldn't even do that ever. It's crazy. But apparently, this is the norm for people I talk to, how much homework these kids have. But it's insane. It's insane, like so much. And even when I'm studying some of this stuff, I have to learn. It's not like, oh, well, this is going to be easy. I'm going to help her out. It's not that easy. And I told my daughter, look, just get C's. You get C's, you're gold, because by the time you get to college, you're going to know more than your professors. But just the time management right now with my life in the house, holy shit, man. I don't know who said, build your own house, it's going to be great. I used to play golf at least once a week. Now it's maybe once every 3 weeks. I mean, I go out and I hack the ball and I have a great time because I'm just out. I don't even care. The idea of free time now is watching 5 minutes of TikTok in a bathroom once a day. And even then, my wife and daughters are like knocking, hey, you coming out of it? I'm like, just give me 5 minutes. 5 minutes. Should have stayed put. Not build a new house. Not send them to new schools. When I was a real idiot in high school, and I think I turned out okay. Not that nuts. But you have to reach for the stars. Go all in. Go get the house and everything. Anyway, enough bitching. Things could be a lot worse, I guess. There's not too many people out there that are telling you, hey, you know what? You buy a new home or you're building your new home. Yeah, it's stressful. Everyone's like, oh, you got to do it. It's great. It's great. That's what you hear all the time. It's kind of like the Disney postcards you see. Your 7-year-old daughter on your dad's shoulders. The mom and your 9-year-old son holding hands, sharing an ice cream cone what you don't see is the parents waiting 2 hours for the ferry or tram to get out of Disney World at 9 p.m. because the kids want to see the fireworks and they want to fall asleep anyway. They're crying. Parents are telling the kids to shut the F up before I throw you in the lake. You don't see that. You don't see that. Believe me, any parents leaving Disney World and staying there for the fireworks knows exactly what I'm talking about. Because you're like, oh, all right, I'm done. And next thing you know, it's like 2.5 hours to get to your car. And then another probably half an hour in traffic to drive to your hotel. And then are you getting something to eat? If you eat at Disney, it's going to cost you like $500 with kids. They don't tell you that on the postcard now. Just like the house. They don't tell you that how stressful it's going to be, how crazy it is. Anyway, house is almost done. Moving in a few weeks. School's going to be like 15 minutes away. So much happier times ahead. But I like bitching, especially on my podcast, right? It's therapy. Forces you guys to listen, or maybe you don't listen. I don't know. But anyway, appreciate your support. Gonna have fun getting emails on this. But stressful times. All, I guess, good stuff and good problems to have, right? Healthy daughters, building a new house, going to good schools, working hard. But still, doesn't mean I can't bitch about it like everybody else. And man, this is a bitching world these days. Everybody bitches. Friends, family. I mean, you can't. Remember we used to go over, we used to have beers and laugh and joke. Everybody's bitching about everything now, right? They bitch about everything, no matter what it is. It's like, ugh. I just like walk away. I don't want to hear it. And as you get older, that's why I always appreciated my grandma and she was alive and grandparents and stuff. Like there's no bullshit, right? Like they don't want to hear something. They're like, I don't want to hear it. Just stop talking. They know time's limited. They don't want to deal with any of the bullshit. But I see that as I just turned 50 now. But anyway, let's get to the markets. Let's have some fun here. Because earnings season, about 75% done, and it's been a disaster for the most part. I mean, you wouldn't know that by watching TV or watching where the major indices are, right? But when all is said and done, this quarter, Q4, earnings are likely to decline by over 5% year over year. And now earnings have been revised so much they're expected to decline the next 2 quarters, right? So you have 2 quarters, that's an earnings recession. It's going to be at least 3 quarters, probably more than that. But estimates have finally been coming down tremendously. So if you look at September, earnings this quarter projected to grow over 2%. Again, they're going to see minus 5% for the quarter. That's how big the revision was. Isn't that amazing? Tech companies had weak earnings. I think they're down like 20% year over year. While margins are down 10% the same time frame. Even recently, Pinterest, Chegg, Take-Two lowered guidance. Ford was a disaster. I mean, this is like recently over the past few days or so. I mean, you're looking at these numbers, they've just been, lowering. But it doesn't matter. Even when companies miss, their stocks are holding out well, which is crazy considering how much almost every stock has run up into the earnings report. So usually, if the stock is running up into earnings and they beat earnings, usually you see a little bit of a decline and okay, it ran up. But now it's like you're running up into earnings. The earnings are terrible, especially for the FANG names and most technology stocks. And even the ones that beat like, Skyworks, just look where the estimates were like 3 months ago. And they've been lowered significantly, most of them by 10, 15%. I'm not even kidding, by 10, 15% over the past 3 months. That's how much they've been lowered. And you're going to hear that earnings beat. 70% of these companies have beat earnings estimates, the revised estimates. I mean, 80% would have missed if you kept the estimates from 3 months ago. They're not going to tell you that. But it's going to matter. It's not like I'm bitching and, good. If you long stocks, that's good. They're going up or whatever. But it is going to matter. It really is. But just to see where earnings are and how you see earnings declining, starting to decline sharply, and still for 2023, right now, as of today, analysts are expecting 2023 earnings to go 3% year over year. 3%, record highs, 3%. Even though they're expecting, they just had negative growth, negative 5%, right? Around that's where it's going to end, a little bit more than 5% for Q4. They revised the estimates lower the next 2 quarters, so they're going to show negative and negative, but they still think earnings are going to grow. I think by the 3rd or 4th quarter, like by 10% magically. I don't know if they think that the Fed's going to lower rates, and immediately, like the Fed's going to be like, we're lowering rates, and everyone in the world the next day is going to go out and spend everything they have in a bank, right? They think 10%. Maybe it happens. I don't know. But I could tell you, it's a recipe for disaster. When you see stock prices not just gradually going high, they're surging while earnings are plunging. It's a recipe for disaster. It's just a matter of when it's going to happen. And it will happen. and it's going to get ugly. You're going to protect yourself. You want to be long. We do good in our portfolios. However, you got to be protecting yourself. You got to be careful. Of all the news stories, I try to break down a couple things, especially my monologue. I talked about Ford, how that was a disaster. I love how people are saying that, oh, wow, the CEO was so honest on the call. Really? He was honest on the call because he said he had shitty numbers? If he was really honest, he would have told you how shitty the company was the last 4 quarters, instead of lying about your projections and lying about the money that you're putting in and how, EVs and the demand is through the roof. The demand is so strong. It's so strong for our cars right now that we're actually going to lower prices. We're going to lower prices. Even though we don't make money currently on any EV we sell, we're going to lower prices. We're going to lower them just for you. Who lowers prices if demand is high? I mean, I just hate when CEOs lie through their teeth. But again, Ford ran up 25-30% into the quarter, reported the worst quarter by far this earnings season, and fell probably down 7% off of those highs. We should be down pretty much 25-30%. And that's going to happen. You're going to see some companies have pricing power. Some companies are doing okay. That's good. I'll try to find those for you, throw them into portfolios. And not every single company, but there's a lot of names that are in big trouble. When you tell me that your strategy for Ford, and you can see the difference with Ford GM, which I've been telling you guys about for a while, but you see the difference with Ford, where they come out and say, we're lowering prices, and we're not going to see profits on these cars until 2025. Imagine you have a company and you're spending your market cap. I mean, a little more than your market cap, right? You're spending $50 billion on a growth model that you're not going to make money on for the next 3 years. And not because you're overspending, even if they didn't underspend. It's because every product, every car you sell, you're losing money on. Not to mention, Tesla owns the market. They're lowering prices. They're still selling cars like crazy. And yet, Ford's going to be like, we sell the second most cars at 6,000 whatever EVs. I don't know. You better sell more of those Ford 150 gas guzzlers because that's your highest margin product, and you're trying to get off of that. Hopefully you go back to that. GM realized that a lot earlier than you. GM was like, oh, we're not going all EVs. No. We'll try to get into autonomous. Yes, EVs. We're going to have a nice portfolio, but we're selling these cars. We'll just keep it on the radar and not be on the map where we can get yelled at by the politicians and bullshit climate maniacs. That's fine. But anyway, you're looking at earnings are horrible. But that was Ford last week. This week, one of the biggest stories I wanted to talk about is Newmont. Newmont's proposed takeover of Newcrest. Newmont is a portfolio holding, and the stock went down about 6% on that news. I think it's a screaming buy here. One, they're looking to pay $17 billion for Newmont, which they have. They're going to do in stock mostly for Newcrest, right? They're looking to buy Newcrest, which is one of the largest miners, right? Or the largest miner in Australia, gold producer, big copper producer as well. And the reason why I like Newmont, because the deal, they think Newcrest is going to, ask for a little bit more money. They already did. It was behind the scenes, and I don't know when they tried to purchase them, but this price apparently is like 7 to 10% higher or something like that than the price was. And I didn't give a time frame, but it could have been like a month ago or 6 months ago, whatever. But they said this is the second time that they came back. They might ask for a little bit more, but I'm not sure the deal will get done, right? Because you have Newcrest, which has great assets, long shelf life, again, huge copper producer, but shitty management, right? They're still looking for a CEO the past 3 months. The previous CEO left in December. He was there for 8 years, and he was bullying the shit out of people where he would humiliate employees if they didn't make their goals. So, that's probably why the company had record profits, but every employee was like seeing a shrink, right? So I'm not too sure if you're happy about that. Maybe if you're an investor, you might be happy with that. I don't know if that's defined success, but he came out with like this whole apology. He wound up leaving pretty much abruptly in December, I guess. For some reason, I didn't think he was going to leave. He made this big apology. Why apologize and then leave anyway? But so they don't have a CEO, so they have management, issues and stuff. And for Newmont, they have great fundamentals, but growth expected to slow over the next 12 months or so. But, it's priced into the stock where it's being down. That's why I really like it. Nice dividend, but this is going to help the company significantantly. Okay, they're saying it might be dilutive to earnings, right? Instead of being accretive right away, where you're making money off of it right away, where you're going to lose money for a couple of years, not that much. Because if you look at gold companies, it's not like, factories and Ford or whatever. Where you can cut costs and you have synergies and stuff like that. You have gold mines in different places. It's not like you can cut employees. You still need to develop. You still need to have trucks there. You still need to have, separate people on site. It's not like, oh, well, let's close that mine and then merge it into here. You can't do that with factories. You can. All right, we got 4 factories. Let's close 2 of them. All of our production comes from here now. Again, I make it pretty easy, but there's not a lot of synergies in some of these things. What it is for Newmont, though, and why this is going to be fantastic for them. Well, one is, if the deal doesn't go through at this price, Newcrest has to be careful, because I don't know if anyone else is going to come up with this price. You could say Barrick. I'm not too sure if Barrick would do it, though. That'll be not a merger of equals, but they have a smaller market cap than Newmont. But if Newmont's able to pull this off and buy Newcrest, listen to these numbers, guys. Newmont's going to increase their gold reserves by 60 million ounces. That's a 50% increase. They're going to increase their measured and inferred resources by 120 million, which Newcrest's M&I resources are greater, right? So they're going to increase by 150%. They're going to increase their copper revenue. Right now, it accounts for 3% of sales. They're going to account for more than 10% of sales. They're going to increase their sales of copper by 230%. 230%, which is huge. Copper's on fire. Cover that in a second. And the combined company is going to produce roughly 8 million ounces of gold production at an average all-in cost of $1,150. I mean, you talk about margins, talk about a great investment. This is it. This is great. They can go a little bit higher for it, but this is it. Now, why do I like Newmont? Because either they're going to get this deal done, and maybe the stock goes a little bit lower, because that's what happens when you acquire, you make a large acquisition. But if you're a believer in gold over the next 2-3 years of how big it's going to be, and I've bought so many companies like this that they'll have like one of the biggest acquisitions in their history, and you'll see the stock come down, be 10-15%, and 2 years later, it'll be up like 200%. I've made a lot of money in my career doing that with companies, just seeing that. Right? This whole balance, because everyone's like, quick, they want to know 1 year, it's going to be dilutive. I just told you the numbers. I mean, this is, it's Newmont and everybody else. I mean, you got Barrick, Agnico. I mean, they're not even in the ballpark of Newmont anymore. And not only that, the copper is huge. When you look at the bigger picture, I mean, it's difficult to add reserves in low-risk countries. And it's been like that way for decades. So if you look and this is Thompson, right? Thompson First Call, right? It's S&P that came up with this stat. It was fantastic. 341 major deposits discovered between 1990 and 2021. So we're looking at 30 years, basically. Only 28 of those 341 were found in the past decade. Of those 28, again, since 1990, they've only amounted to just 6% of the total gold discovered since 1990, for the past 30 years. That's how crazy it is and how difficult it is to find major gold deposits, especially in mine-friendly jurisdictions. More importantly, let's dig in a little bit. This is why I wanted to cover this subject today. Look at the recent deals that we've seen in gold. Newcrest Mining buying Return Resources. You have Agnico Eagle and Kirkland Lake Gold. That's a $10 billion merger. Kinross Gold's $1.4 billion acquisition of Great Bear Resources, which they say it's a junior, but it's a super high-grade project. It's a really special project, Great Bear Resources, right? So $1.4 billion. So you look at these deals, and for me, it makes you think that the junior miners could be in a lot of trouble. A lot of trouble. Because why would these companies go after the junior miners? And you can say, well, they might have this big discovery, and again, they're planting their flag in the ground. Everyone's like, cheering, okay, great, that's awesome. And they try to sell this project. They'll drill a couple holes here or there, few $1 million, whatever, and they try to sell these projects, increase that grade, increase that deposit as much as they can, make it look, rapid and just nice, present. And this way they'll get bought by the bigger guys. However, I mean, you're looking at 12 to 15 years by the time you put that stick in the ground and drill that first hole, just to see what's in the ground compared to when you're actually producing gold. So think about the costs associated with that. I mean, you are looking, the costs right now, these juniors are going to require tens, if not hundreds of millions in capital over the years to bring these projects to production. Not to mention the borrowing costs and financing now compared to last year. You know how much it costs? How difficult it is to raise money? It's not that easy anymore. It's insane. So when you're looking at this, unless it's a fantastic high-grade gold project with super low cost, which I don't think you're going to find anywhere, it makes you think like the juniors. And look, if prices in gold go up to 22, 23, 2,400, the whole market's going to do well, and junior miners might outperform the bigger guys. But you could see how the bigger guys are positioning themselves. They're not going out. Like $17 billion is enough to buy like almost every freaking junior on the planet. And they're like, F you. We don't want that. This is what we want. We need producing. Producing assets have long lives, more than 10 years. And more importantly, you want to make sure that it's not just gold producing, but gold producers have lots of exposure to copper. Because copper prices, and man, you think the supply, demand, and balance for uranium is crazy? You should see copper. Prices have been surging for the past few months, and that was with China closed. China's open now. I mean, look out. But gold prices, I see gold go much higher this year, over 2,000. I think 2,200, 2,300 would not surprise me. Margins for companies like Kinross, Barrick, Newmont are going to explode higher as you're looking at that all-in cost around $1,100, $1,150. And they're already printing money at $1,800, $1,700 gold prices, right? They have dividends, cash flow, massive cash flow that they're generating. Again, the only thing that happened to these companies and why it wasn't so big is because those all-in sustainable costs were $900. And they were $1,000. Now they're like $1,100, $1,150 because the cost, oil, rubber, tires, metal. I mean, it's insane how much the costs have gone up to drill, to mine. And that's what's kept these guys from really going a lot higher. Because in a market where you're seeing, again, technology company, their margins on average are down 10% from last year over year. This current quarter compared to last quarter. Earnings are down tremendously, but margins are down 10%. These are companies that margins are getting higher and higher and higher. You're not seeing that a lot, right? Companies are starting to lose pricing power. But if you look at gold, as prices go higher, and now these guys finding ways to eliminate their costs and maybe, cut back on employees and lower costs and improve their cost structure. But then when you see that underlying commodity going higher and higher, which is likely with gold from here, a lot of people see gold over 2,000 this year. I don't see it at 1,500, wherever it is now at $1,800 level. But to me, that's a big story. That $17 billion bid's a big story. I want to see if that goes through. If Newmont can get that deal done, great for them. Might have to go a little bit higher on it. But I'd be careful if I was Newcrest because I don't think anyone else is coming around the corner. And again, looking for a new CEO, the culture, the employees and stuff like that hasn't been too good over there. They better be careful. They better be careful because if Newmont calls their bluff and says, hey, you know what, I'm walking away, kind of like what Amazon did to AOC when she was like, oh, we don't want these tax credits or whatever. She didn't understand economics, that how much they were going to give to the community, Long Island City, and pay these, new employees. I think it was 25,000 new employees and stuff, and build this, home base in Long Island City, which is such a great area, man. Just, the melting pot, man. Just so many different nationalities, hard workers. I've lived there for a few years in Queens, and AOC was just like, she like pounded her chest. It was like, yeah, I beat Amazon. Amazon, like 2 seconds, like, all right, we'll go someplace else because there's 5 million places in the world that want this deal, that would take this deal to heartbeat. She just didn't understand economics. Be careful with Newcrest because they push, and if Newmont walks away, you're going to see that stock really get hammered because I don't think anyone else is coming. I don't see Barrick coming. That would be a very big deal. Maybe. Maybe when the big metal mining producers, I'm not sure. We'll see. But definitely get some exposure to gold, especially now since gold stocks have really taken a beat in the past week. And holy cow, a lot of these names are down. I use the opportunity to buy in this pullback. It's a great opportunity if you have a 12, 24, 36-month time horizon. It seems long from 12 to 36 months, but seriously, the next 2 years with gold, I think it's one of the areas that you could see clearly where the margins are going to go higher, where it just makes sense with all the government spending, with everything. People go into gold as a safe haven, as a store of value. Even the margins are good in this industry. As long as you're holding up above 1,600, 1,700, which I see gold prices easily doing and likely going over 2,000, these companies are going to print money. The big names are going to have nice dividends. I mean, you're seeing a lot of consolidation in the industry. I mean, this is an area that actually is not uncertain over the next couple of years. And that's why I like it. I think it's a great place to park some of your money and get exposure. And I do that on this pullback. especially Newmont. Newmont could come down a little bit more if that deal gets through. If that deal doesn't go through, you're going to see the price jump up, pretty much regain everything that's lost, which is down about 6% since they made that offer. Maybe it goes down a little more. But again, take a small position and add to it, hoping that it goes down even more, because if this deal gets done, holy cow, Newmont's going to be a powerhouse. A powerhouse. I mean, they're going to be the gold company. And man, just the valuation and everything, it'd be a screaming buy if that deal goes through. I'm hoping that stock would come down. We have a half position right now. That's what I'll use to add to that position. I think we have that in Curzio Research Advisory. So guys, that's it for me. Covered a lot today. Sorry about the bitching. I don't do it often. But again, release some stress. I'm glad you guys are there to listen to me. Or not listen to me. I'm sure I'll know by getting your emails. And those questions and comments go to frank@CurzioResearch.com. That's frank@CurzioResearch.com. I'll see you guys tomorrow with the one and only Daniel Creech. Take care.